It is Friday, the 17th of July, 2020. This is Brian Shannon from alphatrends.net. We had a largely positive week. The NASDAQ lost a little bit of ground, but it's still having quite a strong year, up 22%. So let's take a look at the charts and make some sense of it. Every single week I get comments in YouTube and usually on Twitter about why the market has to top and that this is a double top and all kinds of nonsense that's contrary to what price action is telling us. Price action is telling us we're in an uptrend. We're making higher highs and higher lows. We are stuck just below this level. That's not what a double top is. A double top is only recognized if it breaks down below this level. So a double top looks like this is point A, this is point B, point C, and then we break a trend line, and then we break point D. We add the height of A to C and come up with our price target. So we are not looking at a double top here. Let's focus on the intermediate term trend. Here we see this is a 15-minute time frame, and again this week the volume weighted average price from the June 29th low was hit Tuesday morning. It bounced from there, so that's why I drew a volume weighted average price off that level. That's that blue line, and you can see that came together with the volume weighted average price off this gap. We're also above a rising 5-day moving average, so our first level of significance next week is about 319. If we break below that and hold below it, well then perhaps we come back down towards 315. If 315 doesn't hold, then we have to look at longer term time frames. I'm going to be out all next week, so I don't really, it's not my concern basically. The NASDAQ is still making that same exact pattern that we've been talking about. Week after week after week, we see higher highs and higher lows. And this week we made another higher low. Right here is what it looks like. Now, intermediate term, we're a little bit more defensive because we're below the declining 5-day moving average, but we did hold the volume weighted average price from the June 29th on a closing basis, as well as the volume weighted average price from this gap on an intraday basis. So if anything, we're just a little bit more neutral on the NASDAQ, but the longer term trend is still higher. Getting below and breaking below 256, 255 next week, then perhaps we get a little bit more defensive. The shares of the Russell 2000 broke out of this little range right here with the rising 50-day moving average, and they're kind of consolidating around the 200-day moving average right now. Over to the 15-minute time frame, we're above a rising 5-day moving average. The break of this resistance is so far holding as support. So what we want to look at, I think the key level for next week is probably down about 143. That's the volume weighted average price from this peak and then this low as well. So above 143, I think you give the benefit of the doubt to the buyers in the Russell 2000, and maybe this market will start to show some outperformance to the upside. It's interesting this week too that we had news about Twitter, and it kind of impacted me personally because my account got shut down in the confusion from Twitter and is still not up. They're trying to protect my account, I suppose, but it's still somewhat frustrating. Before it was, before that, the intraday news came out here at the end of the day on Wednesday, I was saying, this looks like the key level, the volume weighted average price from the 29th low. We didn't even get to that. And a lot of people were saying, oh, it's going to go much lower. Look beyond the headlines. Twitter gets hacked. So what? I think $150,000 they said was lost due to this hack, and maybe a little bit of embarrassment, but it's not going to change this company. Equifax, Target, Home Depot, all those guys had major hacks, and no one remembers those. Move on. Listen to price action. Price action says it was no big deal. We closed higher than when that news came out. Over to the semiconductors. Semiconductors continue to remain strong. Let's look at the daily time frame. We spoke about that 154 level, and we continue to hold above that. That's the key level to continue to hold above. If we break below that, then perhaps we get a little bit deeper pullback, but there's nothing here on the 30-minute time frame suggesting that that is the case, that we will begin to pull back. If we begin to pull back, you get more defensive. Quit trying to predict where the market's going to top and losing your money every single time it continues to move higher, like it did in the biotechs. The biotechs came down to their first important level. This is the level we were looking at for Alpha Trend subscribers. It's the 5-day moving average and the volume weighted average price from this low kind of came together in there. So buyers regain control, and the longer term trend of higher highs and higher lows, all-time highs, remains intact for the biotechs. So again, innocent until proven guilty. Below 140 next week, then you get a little bit more defensive. But right now, the buyers remain in control. The buyers this week showed that, again, you don't sell short on a very short-term break of a level. 2250 we spoke about. We spoke about if it breaks below and holds below that level, that we would get a lot more defensive, but not short because we didn't want to short on weakness. We were looking to maybe short like this as it came back down. Instead, from that failed move lower came this fast move higher. Now, looking to a 30-minute time frame, we can see the volume weighted average price off of the peak that it's made this year is right here, and we're closing above that. So I think that next week we have the potential that the financials could begin to outperform a little bit. I would think that the key level right now you want to see hold will be the volume weighted average price from this July low that we saw 2 weeks ago. So again, I'll be out of town next week, and hope you have a good week. Thanks for tuning in, and that's it.